this morning we have, from closest to me, we have Tony Sage, Chairman and CEO at Critical Metals Corp. We have Erez Ichilov, founder at Cedrus Arbor LLC. We have Adrian Day, Portfolio Manager at EuroPac Gold Fund. So maybe we can start with just a quick introduction, if you want to just tell our audience a bit about yourselves, and then we'll get into the questions.
Australian, as you can tell from my accent, so hopefully everyone can understand it. Our Brit here didn't quite get me a bit earlier.
Deliberately.
So I've been in the industry for over 45 years. I started off as a fund manager, so I knew that side of the fence, and then in 1996, our funds management group got bought out by a bigger one. So I went on gardening leave for about a month and I couldn't handle it, and I turned to the dark side and became a promoter. So since then I've been active in over 30 countries, different types of minerals, diamonds, gold, iron ore, coal, copper, nickel. So whatever the industry needed, I was out looking for it. So basically that's my background. We floated a company on the NASDAQ in February, rare earths and lithium. And that's where my current focus is.
Good morning, everyone. Erez Ichilov, a New Yorker. Some of you, I think, know me as the managing director of Traxys Projects and Traxys Battery Holdings, where I was for many years. My background is not technical or engineering. I was actually a corporate and capital markets lawyer, then got my MBA, moved to business development, was the deputy CEO of Cunico Resources, which was a big nickel company, and then became the managing director of Traxys on the investment side. In recent years, my focus is more and more on critical minerals, or as we like to call them, sort of net zero enablers, with a special focus on innovation and technologies that can sort of help us do things in a more efficient, cleaner and competitive way. So that's what I currently do, and I'm an investor, an advisor, a NED and an executive director in several companies. And yeah, looking forward to having plenty of great meetings here at 121.
Okay, my name's Adrian Day. I'm from England. Lived in this hemisphere anyway since 1974, a long time, before many of you were even born. But I'm not a technical person either. In fact, my degree is in history, imperial history actually. But I frankly think history is very, very valuable for investors, particularly with gold. We manage the Euro-Pacific Gold Fund, which is all gold or silver, but only those two. And then I also manage separately managed accounts, which are in everything.
So, but just to kick things off, I thought we could start with a broad view. So, how is the current kind of global political, economic environment impacting metals and mining industry? But also, what are the biggest impacts on the industry that you're seeing today, and especially on investment? So.
Yeah, I mean, this is a huge question, obviously. Yeah. So the way I look at it is, particularly with gold and silver, the monetary metals, we all know why gold has been going up for the last 2 years, up until the last month, let's say, or 6 weeks. And it was not the normal reasons gold was going up. We all know that. The central banks were buying for their own particular reason. Chinese consumers were buying for their own particular reason. But we've now seen the macroeconomic environment, particularly in the West, start to turn with the Federal Reserve's first rate cut. And so we're seeing a slowing economy in the US. I think that's becoming difficult to ignore, that the economy in many ways is slowing. Rates are cutting, the dollar is weakening. And of course the stock market, although the US stock market continues to go up, the breadth in the stock market is extremely bad. And so that's the kind of environment, if you go back to 2000, 2009 and so on, that's exactly the kind of environment where gold and silver do well. So in my view, what we've seen for the last 2 years is really just like an amuse-bouche, if you like. We're now beginning the gold bull market.
Well, obviously, when times are rough, gold is definitely a refuge. But two other, I guess, things that may create opportunities. Bifurcation and global tensions could create regional opportunities. Developing, regional clusters of mining and midstream into mining. So we do see some opportunities generated by some either pure resource nationalism, protectionism, or sometimes just various defensive sort of actions, which create opportunities, I think, for companies in the mining and the conversion space. Another big theme and big trend that's going to, I think, be relevant for the minerals economy is digital infrastructure, the rise of high-perform computing, data centers, as they're known, in the real estate jargon and so on. There is a real need for a lot of electricity, ideally green electricity, but not necessarily, but very close to, in terms of timing. Timing is very important, and this may generate opportunities for co-location. A lot of the reshoring, onshoring, and industrialization that we're seeing here in the US today is in brownfields. It's in facilities that used to be something else and are now bought again and converted, which means that they are connected to the grid many times, or that you can staple an IPP to them. Many times they have the digital infrastructure as well. It can be fiber optics and so on. So this opens up investment opportunities from players that were not classical mineral players. Suddenly you can co-locate with an IPP, with a data center provider, which is actually real estate in many ways. So, we saw in recent years how offtake advances and OEM investments were part of the ways to sort of make up to some extent for the lack of investment from private equity or from retail. But this may broaden the horizon of potential investors. Add to that innovation, the fact that we are seeing a lot of innovation, whether that's exploration companies like Cobalt, like Varai, like Astera, companies that are processing in more efficient ways, hydromet replacing pyromet like LifeZone and so on. This also means that potentially we'll have tech investors that we've been waiting for them for many years joining in. So on the half full glass part of it, there is potentially a broader crowd of investors that can help us stimulate the minerals economy all the way from the upstream to the downstream, feeding into energy transition and the digital transformation, which is another narrative that's very mineral intense and potentially overlooked at this stage.
Yeah, just to go on specific examples of exactly what you're saying. GM, Ford, BMW, Mercedes, VW, whenever in history have they invested in mining companies? Never. So what you're saying is absolutely true. There's a brand new set of investors. But I'll go one step on the geopolitics. We've got one big problem in this world what needs facing, and that's the Chinese influence on several of the major rare earths and lithium suppliers. 80% of the world's lithium gets into China, and then they export it around the world at a massive profit to themselves. But everyone is relying on that. On rare earths, it's over 90%. Now, that's why you've seen governments. Now, I've never seen it before in my lifetime in Australia where $1 billion was given to a rare earths company from the Australian taxpayer. So that's unheard of. The US is doing exactly the same. The EU is doing exactly the same through the Critical Metals Act. So in my particular space, which is rare earths and lithium, we're seeing a massive recognition that we cannot rely on China, especially what's happening in the South China Sea. And of course, what's happening with two wars going on, one in Ukraine and one in on the Middle East. A little unknown fact is more missiles have gone off in the last 4 years than they had during World War II. All those missiles, guidance systems, are rare earths. Who produces all the rare earths? China. That's why you'll see the EU, NATO, US government, Australian government, British government now really pushing for investment into our industry.
And the Canadian government
Yes.
has a critical minerals list. Yeah.
I agree we need them, but as they did in, I think it was June 2021, they banned the export of rare earths and certain rare earths, and that's really created a problem for the West. So going forward, I completely understand the plant they're building in Western Australia has failed. It's 4 years, they still haven't got nameplate capacity, the hydroxide plant. So they're going to have to go back and get the Chinese technology.
So maybe we can talk a little bit more about kind of the global kind of government's response to kind of China's role, but then also, you know, what's happening on the ground in the US, in Canada, in Australia. Do you think that the government response has been what's needed to kind of propel national industry forward, or is there something missing?
No, well, look, we've applied for grants and subsidies and interest-free loans to our industry. We're getting a lot of good reaction. I was in Washington last week. I met with the DoD, the DOE, and the State Department. They introduced us to Lockheed, Boeing, so we've had meetings with them. And yes, they're really trying, but you've got a little thing here called an election coming up, and not much is going to happen until the administration either changes or new people come in February. But the Australian government certainly led the way with that $1 billion to Linus, and the EU is certainly pushing their Critical Metals Act.
If I may, just speaking in Canada, yes, they're giving, you know, and I'm not Canadian, but they're giving grants, but much, much, much more important from my point of view than the grants is the speeding up of permitting. The Canadian government with their critical minerals is also making introductions for very small companies with projects, introducing them to, you know, the key people at GM or the key people at Ford. And in the normal context, that might take a long time for a small company to get those introductions. So to me, that kind of stuff is much more important than you know, the grants personally.
Thank you. Bob Warriors of Cisco Metals. To what extent do you think that Chinese manipulation of commodities is affecting the market? On the rare earth front, I think that China has been manipulating prices for a long time, and every time there was a surge, development happens in North America, and then the prices collapses and the projects are iced. And I think we saw the same thing in the last year in the lithium space. So is it real? Would you qualify it as manipulation or?
Yeah, I'm not a trader anymore, but no, manipulation is a hard word. But when you do have market dominance, and you know you can, to some extent, in these pretty small pools, lithium is what 1 million tons LCE this year. Nickel is what 3, 4. So every little valve could make a difference. Some of it is, you know, potentially more, you know, more manipulative in a way, but that's a harsh word. More competitive, but some of it is also to the merits. I mean, look at nickel in Indonesia, for example. There's a lot of, you know, everyone was complaining about the dirty NPI route and going from NPI to matte to battery grade, connecting the second the class 2 and the class 1 nickels. But now they're actually implementing the oxygen furnaces, which can just take the laterites directly to matte. And that's going to make a big difference also from an environmental perspective, which was a very strong point of criticism, but it also means there's an auto valve to open if prices sort of pop. Is it the level of control where there's some sort of a conspiracy to keep prices below, a notch below the incentive prices? Maybe that's taking it too far, but it's definitely a competitive space with one very dominant player that actually rolled up their sleeves and went into the pay dirt 20 years ago, knowing that they're not a big part of this value chain. and carved out a big space for themselves. So yes, it creates, obviously we have issues on various levels with what happened, and like Tony was saying, especially in certain very strategic niche materials where we're almost reaching this paradoxical level where a missile directed at China will have all key components made in China, which is almost like a 1960s, one of those doomsday movies. But I think we should roll up our sleeves in this part of the world. And I see, besides the governmental support, the various, the LPO, the ARPA, all these plans, what's also very important is the efforts that are done by the DFS, by Minvest, by the Mineral Strategic Partnership, to pull together, beyond just Australia, Canada, and US, all the countries that between them actually have everything you need from upstream to downstream, and have a lot of the markets and the consumers, and bring them together to create a more integrated space, which will either be, in an ideal world, part of this global economy, or if we do get bifurcated by geopolitics, will stand on its own feet to the merits and to the economics, and not just through subsidies and through tariffs. So that's what we're all hoping for, that through these joint efforts and through a lot of innovation, there's no avoiding that. And I think that's where we're good. That's what we're good at. Starting from the weaving needles 150 years ago to the internet and everything. Internet was invented by DARPA. So I do think that we will be able to move forward and transition in a cooperative, community sort of fair way into this new economy, the net zero economy of 2050.
Yeah, I have a slightly different view, being a miner. Is there a difference between control and manipulation? Who knows, but definitely lithium, definitely rare earths, NdPr. Every time the price goes the wrong way, it comes down. They get industries to go up, and this is what's happened in Australia many times. So the lithium price goes up, comes back down, companies close their mines, and who buys the mines? The Chinese. So they do. And one of the most easiest ones to manipulate, obviously, is NdPrs, but iron ore. Every time the iron ore price goes to a certain level, it's just, the Chinese government says, the steel mills don't buy anymore. And recently it went to 130, I think, and it fell within 2 weeks to $88 because they wanted it at $88. So whether you call that manipulation or control, it's harmful, but as everyone on this panel said, we need them. Australia's wealth is built on the back of China's growth over the last 30 years, and everyone knows that. So you have to be, as a miner, be very cognizant of the fact that you've got to have your operating costs at a level so to wear through these changes in price.
Thank you. My name is Jeff Musseri, and I'm with Greystone Asset Management. I've been listening to all of you, and you've all been talking about mining the rare earths. But is not the gating factor the processing of
Yep.
and are the governments actually focusing on the mining, or are they focusing on the processing? I think that's where the big gap is.
Sure.
You're 100% right. It is the processing that is the issue, not the mining. So the governments that I've spoken to over the last week in Washington are really focused on where a plant is going to go, what technology you're going to use to produce this, and this for us. So yes, you're 100% right. It is the processing, but without the ore in the first place.
No, you're absolutely right. There is a magnet plant that's going to be built here in the U.S. on Japanese technology, and on the downstream part of it. And there is Kotek, one of the companies I'm on the board of, is going to implement a magnet recycling project with German technology here in the U.S. But where the Chinese know-how / IP is very strong is in the midstream, and that's where we're that's what we're going to have to bring back to Europe, back to North America. And I think that getting funding and support for that from the various Western governments is something that's very feasible.
Right.
A question over
I
here?
think you already answered my question. I was going to ask if the lithium processing plant that's planned in Texas, wherever it is going to be, if that's going to have a material impact soon enough to really impact the growth curve of that market in this.
Yes, it's
Plant,
not going to
yeah,
have a
it's-
big impact.
So no.
So no, it
No.
won't.
But by the way, one might argue that if you look back to 2019, and you sort of take a list of all the lithium juniors that were ready to go at that point in time, the only one that really went through all the way is Sigma Lithium, that actually walked the walk and didn't just talk the talk. Nothing, unfortunately, happened with great assets in Quebec and Ontario and some other places in the world, Portugal, etc. We thought at the time that maybe the critical element is the midstream, that if there was a conversion solution, if there's someone making wine in your region, why not grow grapes?
Yeah.
That's still a rebuttable presumption because no one actually built the winery. And maybe in terms of government support and where do you write the checks, potentially one could even argue that if Canada, US, or whatever would have just opened a state-owned lithium hydroxide plant with 100,000 tons or 200,000 tons LCE capacity and privatized it on the New York Stock Exchange, we would have been already beyond that point. And maybe actually market dominance would have been with hard rock in this part of the world.
Hi, I'm Charles from Infinity Resources. I've just got a question for the panel in relation to lithium production and rare earths. I mean, the elephant in the room, right, is the cost of labour. You know, China is a communist country. It's very cheap to get anything done over there, right? So I guess in relation to trying to, I guess, find a solution to de-risk that from a geopolitical perspective, do you think it's worthwhile governments exploring, you know, countries like, say, India and Mexico, for instance, right?
Yeah, a very good question. When they announced they were building a hydroxide plant in Perth, Western Australia, where I live, I just, what? The labour costs are extraordinarily high. They didn't have the right technology. They've got a very strong union movement. It boggled me when they did that. And I don't think it'll ever be profitable myself, but it's owned by the Chinese. So they're willing, and they've done the same in an iron ore mine, a magnetite mine in the Midwest of Western Australia. They spent $11 billion. The capex was supposed to be 2.5. It's 14 years, I think it's been operating, Balmoral, and they've just got it to profitability. They think long term, but you're right. I think Mexico is a place that the Western world will be comfortable with. India will be a place the Western world's comfortable with. For the first time in history, Chinese labour costs are higher than Mexico's labour costs. So that's an interesting fact.
Although they did sort of quasi-nationalize the lithium industry in Mexico. There's potentially no room for private sector, but there's a whole, that's a different topic.
So we don't need to get too political, and we don't really have too many Americans on the panel, but I thought it'd be good to talk a little bit about, there is an election coming up here that's going to have global impacts, and especially on this industry. So just interested to hear your thoughts on whichever way it goes and how you think that might impact the industry moving forward.
I think we should
don't
start
need
with
to
the
know who
US,
you're
mate.
voting for.
I'm not going to take a bet on which way it's going to go, but what I can say is that I think that regardless of which direction it goes, potentially some of the branding may be different, but the need to reshore, onshore, reindustrialize is very real. It's within the political consensus. And there's a huge market here, 350 million people, 1 billion if you go Americas, and 3 billion if you go sort of the Pan-Atlantic supply chain, as we were calling it before it got a little bit bifurcated and competitive between EU and NAFTA again. So I think all the themes that, that we're talking about in terms of mineral-based economics, whether it's just the brick and mortar of GDP growth, et cetera, which on the Chinese side we're seeing now the stimulus, which I guess is making up for the one baby policy and so on. But here again, we're seeing rates slightly going down, and there could be, and it looks like the numbers are sort of holding. Digital infrastructure and everything that has to do with, AI is the fancy word, but in reality, we're going to need a lot more electricity, as green as possible, ideally. We're going to need a lot more minerals, as much as possible, coming from recycling, from reprocessing tailings, from better ways and cheaper ways of primary processing and so on. So I do see this, I don't know, third industrial revolution, or any way you want to call it, as something that's very fundamental, almost apolitical, and that one way or another, with different slogans, different brands, and potentially with different emphasis, as something that's very fundamental, and I think will withstand almost any political regime, whether it's more Republican right wing, or perhaps more Democratic left wing here. So from that perspective, I'm cautiously optimistic that almost regardless of the specific result, as long as we don't have a situation where whoever is the president cannot operate because they don't control the houses, and then you have this that type of a clogging and stagnation. As long as things can flow, I think that the mineral-based themes on power, on digital infrastructure, on electrification, on EVs, on renewable energy, and all the storage systems that they will require is something that's fundamental for all of us in the 21st century. And one name or another, or one party or another, will hopefully not determine the future of this nation and the world in that respect.
I think I tend to agree. Like I said before, I was in Washington, and virtually every department said there's not going to be a change. We've already earmarked all these funds. They are going to go out, no matter which party wins. I disagree on one point. That's if one particular party wins. I've heard a comment, drill, 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 baby. So maybe the oil price might be affected going forward, maybe coming down. It depends what Saudi does, if the US does get to where it was 4 years ago. So that's one commodity I think that may be affected with a change.
Yeah, and I would add, you can expand that drill, drill, drill theme to an easing of permitting generally, which will help some of the gold and silver companies get their permits easier, but it won't really affect the price of gold and silver. And whoever gets in, maybe there'll be a difference of degree, but the deficits are going to continue growing. I think that's something I don't think I'd find anyone who would take the other side of that bet. So the deficits are going to continue, and and rates are going to come down, whoever wins. That's going to be positive for gold. But the easing of permitting under one side will help oil companies, will help, gold and silver companies.
Just one more on that one thing where we didn't touch it so much is carbon capture and voluntary carbon credits, which are also an important part of, first of all, additional potential investors in the mineral sectors, because a lot of the mines are also potentially generators of high quality carbon credits, because these are credits that are really from permanent geological storage as opposed to just avoidance. But even if we do drill, 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 a lot of the oil economy can co-locate and can generate carbon capture systems, which, if you remember, a couple of years ago, it was about to be actually mandatory that every oil refinery would also have a carbon capture system. But then it was canceled because environmental resistance, which basically said it will allow them to cheat and stay in production longer because the total carbon footprint of the installation will be lower. So actually we have to go all the way, and that was something that actually was a bit of a spoiler there, but a lot of them, you're burning the methane, you can actually cogen and produce power. And if you're producing power, then there's a combination, then suddenly it's potentially green power because it's recycling power. So I guess what I'm trying to say is that there's a lot of nuance, even within the sort of brick and mortar carbon economy, that connects again to the themes we spoke about, whether it's carbon storage, whether it's cogeneration. If it's cogeneration, why not put a Bitcoin mining machine next to it, or that's another usage, or a data center. So all these things, as they sort of converge and layer and integrate, there's a lot of shades of gray, which I think means that we'll still be moving in the same direction, even if we're going to drill as a banner. It's not going to be the same drill as 1905.
Roger Jackson from Australia, Arc Mines. I just find it interesting that the topic about China and also talking about permitting and basically the two rules that we have, our countries, which Canada, USA, Europe and Australia, have one rule, and the rule in China is slightly different. We talk about political influence on permitting, but there's also political influence on the downstreaming of building a plant. The difference between building a Chinese roaster and an Autotech roaster that we'd be required to build, or a high-tech plant in Australia, could add, if not a naught, but it's a significant capex value. And it's not, I don't think it's necessarily a labour issue that we have between our countries and China. It's a standard issue. And I've been to many plants in China and seen how they operate. And we are getting really, really hammered in Australia on what we can and can't do. And the whole carbon thing coming in is getting very, very costly for our industry. And we are abiding by what we call a target. I'm not 100% sure that we all play the same game on this planet, but happy for your comment on that one.
You're 100% right, and Critical Metals is now building its hydroxide plant in Saudi Arabia, not in Australia, not in Austria where the mine is. So we've made our decision based on exactly what you're saying.
And it's the speed of building the plant as
Correct.
well.
Yep.
That's another factor.
Yep. Well, the shareholders, I think, will say yes.
So I wanted to very quickly go back to this kind of the topic of the data centers and the metals needed, especially to supply this green energy needed, this immense amount of green energy that's needed. So are you seeing investment going into these types of projects that are needed to kind of grow this kind of key critical minerals metal supply? Or is it still kind of lagging behind?
Without copper, nothing is going to happen. So if you look at the global copper production now relative to other metals, it dwarfs everything. So in a certain sense, copper is the critical metal. But the demand for copper is going to be fueled by grid networks, the requirement for increased grids and transportation. The proportion that goes into wind, battery, AI, and so on is actually minor compared to what's going to be required. Probably less than a couple of million tons. But most independent analysts, WoodMac, CRU, S&P, and Benchmark agree that we'll need to increase production to about 60 million tons of copper metal a year by 2050, which is double what we have now, which, by the way, is impossible. So the whole green revolution is a bit of a myth, purely from copper production point of view.
Yeah.
Rio put out a presentation, I think, a month ago, that 3000 BC till now, 700 million tonnes of copper has been used, and we need another 700 million by 2040. That's the numbers that they're putting out in their presentation. So, yeah, look for copper.
Yeah, I would add, if I may, but I think you're absolutely right. Copper is fundamental. And for investors, I think copper is probably the one to focus on. It's a lot less easier to manipulate or control, whatever word we use, a lot more difficult. And the great thing about the copper market, is bad for investors. We complain about how long the permitting takes and, the length of time from discovery to bringing a mine on. But the good thing, the flip side of that, is you have really good visibility. So you look ahead 5 years, definitely 5 years, probably 10 years, you can say with certainty that there isn't a major source of copper in 5 years' time that we don't already know about. There will not be a big mine or a new expansion or whatever that we don't already know about, just because of the length of time it takes. And the plain fact is that even if half the predictions about copper usage are only half true, we still don't have enough copper at today's price. So to me, that's the one to focus on. It's the foundation of everything else, and more difficult to manipulate.
It's a bigger discussion, but that's where the new exploration technologies could help in bridging the gaps, in ruling out the false positives and avoiding wasting time on them, and on the other hand,
It'll help.
not missing out on the false
Right.
negatives, which are an opportunity cost. So there's a bit of that, plus some acceleration of permitting. But yeah, it's hard to see how we more than double the production of primary copper. But there's also recycling, and there is a bit of potential for substitution with aluminum in some use cases, where you just need the current collector and so on.
So I think we'll probably dive a little bit deeper into these topics in the next panel, which is focusing on critical minerals. But I thought we could just wrap it up really quickly with our panelists' thoughts on key themes for the industry for the coming couple of years. What do you think will be kind of that driving theme?
Look, for me, it's getting the realisation out to key players in the market that we need investment. I understand the processing, but we actually need to get the stuff out of the ground to process. And trying to convince, especially in the EU, where I've got a lithium mine, where they announced the Critical Metals Act, but they don't like mining in the EU. So getting rid of that sort of negative when they want the product, but they don't want the mining part of that product, which is nonsense. So we're bashing against a few brick walls, but I think we'll get there. But that's one thing that I think needs to be focused on for critical metals in Europe.
I agree with you. I think the most important thing for our industry is sort of winning hearts again, and bridging the trust issues which exist between the general population and the extractive industries in general, and mining more specifically. And we all like to sort of take up the phone and say, there's 70 mines that led to this iPhone or Samsung and so on and all these. But it has to be deeper. It affects everything. How many people actually go to mining school? How many young, talented people want to invest their time and their careers in our sector? And we have to find ways to rebuild trust, make mining it's more than mining, but everything, that the whole minerals industry on all its sectors, we need to find ways amongst us. And it's one of the most fragmented in terms of lobbying, in terms of all kinds of umbrellas and organizations. A lot of other sectors are much better at that than we are. So we just have to somehow unite and spend part of our time, each and every one of us, on basically building trust and explaining that nothing's going to happen without a lot of minerals. And all the images that they have of people underground with chisels, it's not what we're about anymore. And that's, for me, the main challenge, to bridge those gaps and to win the hearts, because otherwise it's not going to happen.
Yeah, I agree with both of those, but I'll change tack a little bit. For gold and silver, the most important thing is just a continuing massive spending, high deficits, deterioration of the purchasing power of the dollar and other currencies. And that's not going to change, and that's what's really going to drive gold and silver.
I want to thank the audience for being great participants and asking what you wanted to hear about.
Thank you.
Thank you.
Good meeting you.